Welcome back. Just following up here on this previous video talking about momentum is that how you would play this would be you would actually just execute this trading strategy. Look up the previous winners, the best ones, and even if you only can buy the top 10 portfolio, hold it for 6 to 12 months and then sell it. That's how you would execute it. Now, we're going to talk about number 5. Number 5 is looks similar, but it's almost the opposite effect. This is called our long-term reversal. And we also know this reversal as a contrarian strategy. So sometimes you might hear, oh, I'm a contrarian investor. This is what we mean by contrarian strategy. Now we find out that the opposite is true when we extend the time periods. So the low performing stocks from the last not 3 to 12 months, this is 3 to 5 years. So the dogs from the last 3 to 5 years outperform the high performing stocks of the last 3 to 5 years. And that's where we say there's going to be a long-term reversal. And once again, the structure is going to be set up similarly, but when we extend the time frames, the strategy is the opposite. Okay, so I already have this set up from the previous video written. And so once again, using the example of the Dow 30, we have the best performing stocks, 10%, and they're still the winners, but now our formation period is 3 to 5 years. And we're going to take those high performing stocks and we're going to sell short if we can do that, or short sell. Then the worst performing stocks, the ones who have been beaten down for the last 3 to 5 years, these are the stocks that we want to buy. We want to go long those. And once again, our holding period is extended because now we're thinking long-term reversal. This becomes 3 to 5 years. And then after that, we buy back the stocks that we sold and we sell the stocks that we bought. And this has been shown to be a profitable strategy long term, that over time, the ones who've gotten beaten down will come back, and the ones who have been a little bit overvaluated will, over the long 3 to 5 year term, come back down to earth. What that means here, if we wanted to be a contrarian investor, we would set it up with a longer term formation period. And we, as investors, looks like I'm running at an angle here, we would buy the worst performers in hopes that they're undervalued and will go up, but we need to give it time. We need 3 to 5 years for this to execute over the long term. So that's how we would benefit from this long-term contrarian strategy. Let's go ahead and stop it here and we keep moving on. What do we have here? Is that that looks like that is number 5. 5 down, 5 to go. We'll keep picking up steam from here. We'll see you on the next video.